What's going on, guys? Welcome to another episode of the Halo Effect podcast. We had to do a rerun of this one. We had recorded a couple weeks back, but due to technical issues, we weren't able to get the proper aligning with the video and the audio and all that good stuff. So super happy to have Bobby Kurpinsky. He is a lender that I've done business with before. He's helped some of my buyers out. And today we'd like to talk about a very unique product that he offers that I really haven't seen anybody else offer on the market. And so, Bobby, just thank you for coming back on and making some time on your schedule to be here with us today.
Yeah, thanks for having me, Ruben.
Perfect. So, before we get started, we were just talking about the 49ers loss a couple of weeks back at the Super Bowl. You're a 49er fan. I don't want to make the wound worse than it already is. But yeah, definitely feel like the 49ers gave that game away. Sounds like you were in Vegas. How was that?
Yeah, it was fun. So I'm a diehard Niners fan. I grew up in San Francisco. I grew up like a mile and a half from Candlestick Park. So I was just kind of born into it. And yeah, it's been pretty painful. I don't think they won a Super Bowl since what, 99, 98, right around there. So it's been what, a decade and a half. But yeah, brought the family out to Vegas. Atmosphere was electric. I mean, there was just so many people. We stayed at the Mandalay Bay. I brought my kids out, my wife, went to a watch party, and yeah, it was a lot of fun until the end.
Yeah, that's awesome, man. It would have been. I mean, I was rooting for the Niners all the way, especially since there's a lot of Bronco, ties with the Niners. Shanahan, Lynch, Christian McCaffrey. That's who I wanted to take it for sure. But hopefully they get it together and they come back next year and win that chip.
Yeah, I think they got a 3-year window, right? Where they're going to keep all their main players like CMC and Bosa, and because they're going to have to pay Purdy coming up here in a couple of years. So, yeah, me and you both, man. I hope they get it done in the next couple of years.
Absolutely. Awesome. So let's jump right into it. The last time we were on here, we were talking about different programs that buyers can take advantage of on the market, and we could definitely touch on those as well. But the main big one that you offer is this HELOC product. That if you use that HELOC, you can pay off your mortgage a lot quicker. Can you tell us a little bit more about that?
Yeah, so it's called a number of different things. You can call it the all-in-one loan. It's called the mortgage accelerator. It's called principal first. So basically, the idea is our bank, and there's really only 5 banks in the entire country that offer this type of product. And you don't hear a lot from you'll never hear about it from Chase and Wells Fargo and U.S. Bank and all the major players because they want to see you basically pay for your home twice, right? When you get a 30-year fix. So this whole idea is of the principal first mortgage is that we come in, you can do it on a purchase or a refinance. We mainly do it on refinances, but actually my buddy in Highlands Ranch just went under contract over the weekend. He had the all-in-one loan before and paid off his home in like 2 years. So he's doing another one on his new purchase that they're moving into here next month. So what it is, basically, it's a home equity line of credit, which I'm sure a lot of people have heard of. We come in, pay off the existing mortgage that's attached to their property with the equity line of credit. And then from there, you're basically just treating this equity line of credit like you do your current checking account. You're going to direct deposit all of your money into it, and you're going to pay all of your bills from it. So you can set up auto pay, like if you have auto payments, set up your auto payment for your car. You can pay your Excel bill, Denver Water, cable, internet, whatever. You're just going to use it has all the same functionalities basically as your current checking account does. And the whole idea is, say just for round numbers purposes, you have like a $300,000 loan. You bring in 10 grand for your income on a monthly basis. So the principal balance would drop from 300,000 down to 290. And then the interest payment would recalculate off the 290. And then you pay your bills from it. So say your bills are what, 5 grand a month. So your balance would go from 290 to 295. But then the following month, when you get paid your 10 grand, the balance will go down to 285 and the payment will recalculate. So you have more money going towards principal. And you kind of rinse and repeat until the mortgage is gone, really. So on average, we're seeing our clients, and we've got hundreds of clients. We do this all across the U.S. We've got hundreds of clients on it. And on average, we're seeing these clients pay off their homes in like 5 to 7 years.
Wow. So essentially, it's like a savings account for your property, right? Whatever you don't use, you're paying off that HELOC with that.
Correct. It's driving the balance down. Correct.
Yeah.
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 So, and what we find too is when a lot of people get on this loan, because when your money's sitting in your checking and savings, it's really not doing anything for you at the end of the day. I mean, you might be earning like 1/4% interest if you're lucky. So what a lot of people do is and what I did myself and my brother and my parents, and they just transfer like 90%, 95% of their money from their current checking and savings account when they got on this all-in-one into the HELOC to kind of drive the balance down from day one and decrease that interest payment.
Right. Yeah, that's a smart way to do it. How much on average are you seeing? Because it sounds like some of your clients have paid their mortgages off in 5 to 7 years, which is crazy quick. How much are you seeing them allocate towards the HELOC every month?
I mean, everyone's going to be different, Ruben. I mean, it just really depends on your income, right? So what we advocate is to put 100% of your income into it, because the difference between a HELOC and a closed-end loan, a HELOC, you have access to that money 24/7, right? Like you'll get a debit card, you'll get a checkbook. So yeah, you really just want to allocate all your money into the all-in-one loan since you have access to it. Whereas, on the other end, a closed-end loan, like a 20, 30-year fixed, if you dump extra money in, yes, you'll pay off your home faster, but one, your monthly payment never changes because your payment stays the same, right, for the full 20 or 30 years.
As you mentioned, one of the benefits with that all in one loan is the fact that your interest rate recalibrates based on the balance that you have on that HELOC
Correct.
whenever you start paying it down. So you're not paying interest on, the original loan or whatever, how it typically is, right? You're paying on the new balance.
Correct. On the adjusted balance on the following month. Yeah. So it basically just flips the amortization schedule upside down, because on a regular 30-year fix, it takes you about, what is it, about 18 years? You would think it would be 15, but it takes you about 18 years to pay off half your mortgage because there's so much interest that's loaded on the front end. And whereas the all-in-one loan, the home equity line of credit, just kind of flips that upside down. So you're paying principal immediately from month one.
Absolutely. So how have you used this loan yourself personally?
Yeah, so I just found out about this loan. I've been doing this. I've been in the mortgage business for what, 22 years now. I didn't find out about it until about 8.5, 9 years ago. Back in, what was that? Maybe like 2014, 15, right in there. And I truly didn't understand it when I first got on it, even though I've been in the business. But my buddy, who's a mortgage broker down the road here on our block, I trusted him, and I was like, okay, I'm just going to give this a whirl. And once you get on it, that's when you start to truly understand it. And it allowed us to pay off our home. Gosh, it was less than like 2.5 years. And really, what you do then is, once the balance is low enough, you have access to that equity line. And what we did was just started buying investment properties, and we just started investing in real estate in Florida, in the mountains up in Winter Park, and we really just started the process over again and kind of rinse and repeat.
Yeah, absolutely. So yeah, you mentioned you have a couple properties because we've talked before in Florida, and then you have a couple in Winter Park as well that you have, and you're doing short-term rental in Winter Park. Is that right?
Yeah, so Winter Park, we actually just sold Winter Park a few months ago just because we got an offer we couldn't refuse. We didn't even have it on the market, but they offered us, the number they put out there was crazy to me, but
The
so
right
we're like,
price,
we're
yeah.
just going to take it.
Right.
But we've owned about 5 different homes down in Florida, down in the Rosemary Beach, Destin area, and so we just own one property down there right now. Yeah, and it's a short-term rental, VRBO, and it's been doing great for us. We love that area down there.
That's awesome. Are you able to share about how much you cash flow every month doing Airbnb in Florida?
Yeah, so our Florida place, it's a little bit bigger because, like I said, we've owned 5 different places down there. We just kind of we sold and we just kept buying up, basically, right? So we got in at the right time, like 5 years ago, and just kept buying up. We don't plan on doing it again because we found the perfect home. It's a 6-bedroom home and 6 bath with a pool, and it brings in about 220 grand a year in rental income. Our mortgage payment is pretty low. We only owe like what, maybe like 500 on it, so we probably pay, call it like 5,000 a month with everything, taxes and insurance, HOA. So yeah, I think we're positive cash flow, like 160 grandish a year on that property down there.
About 15, 16,000 a year or a month?
A month,
15,
yeah,
16,000 a month.
yeah. I mean, it's slower right now, like in the winter months, for, I guess, November, December, January, February, but the other 8 months are just, it's booked up just nonstop. So
Florida does great as far as short-term rentals. I know some more people that do a couple short-term rentals down there. They do pretty well.
yeah, and if you guys have never visited that area down there, Rosemary Beach, Seacrest Beach, it's up in the Panhandle. top left-hand corner of Florida. It's beautiful. I mean, crystal clear blue waters, sugary white sands. I mean, we kind of fell in love with it when we went down there.
Sounds amazing. Um, awesome. What are some of the other products that you guys are offering right now for buyers that may make sense in today's market?
Yeah, I kind of carved out a niche probably about 5 years into my career. So I've been doing a lot of CHAFA, Colorado Housing Finance Authority down payment assistance. And there's like Metro down payment assistance. We just did a social equity closing where they give you a grant. They give our buyers a grant for like 25 grand. That one closed last week. So I really kind of carved out my niche in the down payment assistance community. We work a lot in the Hispanic community as well. I have a Spanish speaking assistant, and that's been great. We kind of help buyers get into the home with very little money down. And then the great thing about this all-in-one loan is, we kind of market to them and just show them how to, one, get in the home with down payment assistance, and two, once they're able to get into this all-in-one loan, how to pay off their home in 5 to 7 years.
Nice. So you combine the down payment assistance and the all-in-one loan. I was going to ask you about the social equity program. Do they have funds now for that program? Because I know they had paused it.
They don't. I think they're going to have funds in the next few months. But yeah, we actually were one of the last. Our buyers were one of the last buyers that got one of the
Yep,
last $25,000 grants from them. So
that makes
it's a
sense.
great program. You have to meet the income restrictions are a little tight, but if you fit in that box, it's a great program.
Yeah, absolutely. Because it's forgivable. Like as soon as you buy the property, the 15, 20, 25 grand that they give you to buy the house is forgivable. You don't have to worry about paying that back again. And
Correct. Yeah.
they have some pretty competitive interest rates for that program as well.
Yeah, I think we got in our buyer at they're like 6.25 right in there. It was low sixes, so it's definitely below where the market's at right now.
Yeah, that's insane. Hopefully they bring it back out because I know a lot of people that can qualify for that program. I grew up in Southwest Denver, so that's one of the areas that is able to qualify for that program.
Right. Yeah. So it's a great program. Hopefully they have funds in the next few months. We pretty much have every program. Those are my two niches: down payment assistance and the all-in-one loan. I mean, I do other loans though. I do regular conventional loans. I do FHA loans, VA loans. I mean, we've got, as a broker, we have so many programs. I mean, we've got bank statement programs. We've got, working a lot in the Hispanic community. A lot of buyers that we're seeing, they go from like 1099 to W2 or W2 to 1099, and we have ways to get around that to help qualify people. So yeah, we just kind of get creative on our end to help these buyers get into homes.
That's good for me to know, and that's why I like having these conversations. Can you touch on a little bit of the workarounds that you have around 1099 and W-2? Because I come across a lot of buyers that are making changes and transitions, right? They have an opportunity here where they're able to make more money with the 1099 or W-2 or whatever the case may be. And I'm always like, if you make that transition, it's going to be very, very hard for a lender to qualify you because they
Right,
want 2 years of constant employment under the same type of pay
right.
uh, that you had before. So can you touch on that a little bit?
Yeah, the biggest hurdles you have to overcome is you want to stay. We want our buyers to stay within the same line of work. Like if they went from 1099 to W2 and jump jobs, that would be different. But what we're finding is a lot of people that we work with are in the construction industry or in the labor force industry, and they're staying in that industry. So it allows us to, if they've been W2 for 2022, 2023, and then just go 1099 in 2024, we would just need a few months on the new job as long as it's in the same line of work. And then basically what we can do is just take a 24-month average of their income to help qualify them. Whereas a lot of other banks will say, no, you went from W2 to 1099, so you have to wait until you have 2 years to file tax returns, right? Because the banks view somebody that's 1099 as self-employed. So a lot of the banks want to see 2 years filed Schedule C self-employed tax returns in order to qualify them, whereas we can get around that as long as they're in the same line of work.
That is really good for me to know because yeah, every lender that I come across pretty much tells me the same thing. Oh, we need to wait 2 years. So I'm gonna start sending people your way in
Yeah, I
that
appreciate
position.
that.
Of course. Awesome. Well, is there anything else that you'd like to share as far as, programs, anything that people should know?
I mean, there's really so many of them, Ruben. It's hard to go over it in just like a
I know.
15-minute podcast. But what I would say, if you want to drop my info in, maybe in the chat or whatever you have, and
Yeah.
if people want to reach out, feel free to reach out, text me, call me, email me. I'm always working. Ruben knows our work never sleeps. You know,
Yep.
it's nice to be able to travel, like go to Vegas and do that, but I'm always at my computer with me, because our work never sleeps. But feel free, don't hesitate to reach out. And if you have any unique scenarios or any other realtors, Ruben, that like, man, my lender couldn't do this, don't hesitate to drop my number and see if we can find a creative way to get it done for them.
Yeah, man. I know you're one of the best. You've been doing it for a really long time. You've taken great care of my buyers as well. So, always happy to send some people your way. And I'll definitely, drop your information here in the description of the podcast as well. So yeah, man. Thank you for hopping on again, taking some time out of your day to be here with us and drop some information on programs available. And let's go out there and kill it.
Yeah, let's do it. All right, Ruben. Thanks for having me, man. Appreciate it.
Thank you, man. Thank you.
All right.